Let's get started and let's consider the latest news for expats living and working abroad around the world. It's tax time for expats. UK expats around the world may have a UK tax return that they need to do. So if you've left the UK in the last year, in the last tax year, or returned to the UK in the last tax year, or if you've got any income that's taxable in the UK, that could be a capital gain from crypto or property sale, or it could be that you've got some other share sales that are going on in the UK. Any sort of capital gain in the UK is always going to be taxable there, needing a return. Or if you're getting property rental income, is also fixed in the UK, so you would need that tax return. So UK expats that are living and working abroad and in another country with a double taxation treaty between the UK and their country of tax residence may still need to do a tax return. And sometimes the Inland Revenue will ask you to do a return, even though you've got nothing to declare, so to speak, but you need to do that return if they do ask them. If you get asked to do a return and don't complete it, you're still going to be liable for penalties. So lots of issues there, issues that Proact have got experience on dealing with. So contact us at proactpartnership.com and we'll sort that out for you. Expats that are living around the world, different countries have different tax dates and tax due dates. And generally, the calendar tax year returns are due by the middle of the year, and we've largely wrapped those up. Some countries like Cyprus are a bit later this year, and then those that with a tax year ending in the spring or the end of June, like Australia or Hong Kong, may have a tax return that still needs to be done now. If you need any help and guidance on that, contact us at proactpartnership.com. What we often get asked questions about in the UK, in Cyprus, is do I need to fill out a tax return? Different countries have different rules. So we've covered previously what the UK rules are. In Cyprus, what are the Cyprus rules for completing a tax return? If you've got personal income below 19,500, then there isn't a requirement to do a tax return. But that's a caveat. That's unless if your income exceeds the 19,500, then yes, you do need to do a tax return. If you've got a worldwide income outside Cyprus as a Cyprus tax resident from dividends, from capital gains, from property rental, then you do need to do that UK tax return, that Cyprus tax return. In Cyprus, if you're self-employed, you always need to do a tax return. If you've got a Cyprus company or you're trading it above a certain volume, any business in Cyprus is always an audited tax return that needs to be done, and a self-assessed return as well for any tax liability that needs to be paid during the year. So tax is not paid when you complete a tax return in Cyprus. It's completed as it arises for dividends, health taxes, property rental income, as well as interest for and earnings taxes that may become due. There's also an issue with a new tax that's been introduced on health tax. If you've got any worldwide income, there's not tax at source in Cyprus for this worldwide health tax at 2.65%. You've got that to pay as well. So there's quite a lot of potential liability. And the big thing always that keeps catching expats out is that if you've got real estate, if you've got property in Cyprus and you sell it, or if you die, even if you haven't had a requirement to fill a tax return in, they will still ask you then to retrospectively fill out those 5 years worth of returns. So for expats that may at some point relocate overseas, Proact always recommend and advise that you complete a return each year, because you're likely going to need it in the event of some dramatic change in your circumstances where you're selling property, relocating with work or family, or on death. For more information and guidance, contact us at proactpartnership.com. So another issue that's coming up for expats around Europe at the moment is to do with our topic of today, but it is a separate issue. If you are got an overseas property rental, under changes to tax regulations, you now can't necessarily freely rent out that property. Legislation, regulation, whether it's to do with health and safety, consumer protection, or just pure taxation. Now, in many countries around the EU, you're required to have a license before you can rent out holiday lets overseas. That's not necessarily going to be allowable. So in Spain, unless you are a Spanish citizen, you cannot rent holiday let businesses. But you may still need a license, and that license might put onerous requirements on you in terms of lifeguards, safety, and insurance liabilities. But it will also, and always will, whenever you get a license for anything, enable the authorities to regulate and ensure that you pay tax. The likes of Airbnb and Booking.com and the international online booking agents for holiday lets as well as longer term lets, they now have to have their landlords registered. The landlord has to have a local license for that property, and that information on those rental income is then shared with the tax authority. So there isn't a discrete tax plan for expats to consider renting out property as a holiday let and discreetly not telling their home country with the tax liability of what that income is. I'm sorry for spluttering today. Don't know where it's come from. We'll manage it for another day. But for more information on registering and getting your property up to date for property let and registration, contact us at proactpartnership.com.